All right. Joining me is Dan Weiskopf, Senior Portfolio Manager at Tidal Financial Group, which includes serving as portfolio manager on two crypto related ETFs: the Digital Asset Debt Strategy ETF, ticker DADS, DADS, and the Amplify Blockchain Technology ETF, ticker BLOK, BLOK. And I'll tell you, Dan is someone who I have known for quite a while on the ETF side. He's a longtime industry veteran, certainly an ETF expert, but he's also someone who absolutely knows his way around the crypto ecosystem. And so he has this unique ability to offer perspective on both TradFi and DeFi. And so, Dan, it is always great to connect. Welcome to the podcast.
Hey, I think this is my first time, Nate, so thanks. I'm an avid fan, of course, and looking forward to our conversation. Thanks for having me.
Well, this is going to be a lot of fun. And I have to start by asking, what is your crypto origin story? Because I have always known you as an ETF guy, right? You've obviously been involved there for a long time, but I do remember you making a turn towards crypto several years back. So when did you first become involved or interested in crypto?
Yeah, everybody talks about this magical epiphany that they were, orange pilled. For me, it wasn't such an orange pill as I've always been an early adopter. As you pointed out, I was early on ETFs 25 years ago. I was also, this part you don't know about me, I did my master's thesis on pawn shops. So when you think about the unbanked, when I started hearing about Bitcoin and its principles, I was drawn to it probably in 2016, 2017. I didn't buy Bitcoin back then. Oops, shame on me, my mistake. But I definitely enjoyed learning about it. And then in 2017, I got caught on, I think it was late 2017, I got caught on CNBC visiting the Riot blockchain or platform company in their facilities when CNBC raided the space, and because they thought it was a fraud. Well, here we are so many years later. Clearly, Riot's not a fraud, and they've raised billions of dollars of capital. So that was my experience. I'm into it, by the way, around the blockchain, and Bitcoin is just one important blockchain.
Okay, so we're going to talk about both of those aspects, Bitcoin and blockchain, very briefly for people who aren't familiar with Tidal Financial Group. Do you want to describe what the firm does?
Yeah. Tidal is about 230 people who work really hard to launch ETFs. ETFs for me have always been about access and themes. We've got 230 people who are working the process to launch an ETF. It's not so easy, but we've got about 80 billion in assets. We make it easy for other people to launch ETFs. And as you pointed out, I'm a senior portfolio manager at the firm with responsibility of managing some of those assets, which is the fun part.
Well, let's talk about that because I mentioned you are PM on these two crypto related ETFs. And I guess let's first talk about the Digital Asset Debt Strategy ETF. Again, ticker symbol DADS, the DADS ETF, which I love that. And I think, as the name clearly suggests, this holds the debt securities of companies involved in digital asset related activities. Um, I guess first, what was the idea behind this ETF? What was a problem you saw that this ETF is attempting to solve?
Yeah, I have to give Michael Saylor credit for the origin of the idea. We did really well when MicroStrategy was not doing well back in 22 by buying the bonds. And he and I go back to 2020 when I searched him out because he was doing the Dutch tender of his stock and then launching that strategy of the company. And he said to me, I guess it was probably 24. You did really well buying my corporate debt at 70 cents on the dollar and selling it back to me at 100 cents on the dollar. You should launch an ETF around the debt. Because why? It's less risky. and you're getting the correlation, was his point. Now, I really like diversification. So while he was saying it was just going to be about MicroStrategy, my thought was it was going to be diversified. And it's focused now around the blockchain space. By the way, what people don't always get about crypto, as you refer to it, or blockchain, as I refer to it, these are real companies, right? That have earnings, they have cash flow. So the goal of DADS is to give you alignment with the evolution of blockchain and the infrastructure, the picks and axes, by investing in the debt side of the balance sheet.
And if I look at the top holdings right now, this is as of yesterday, I see companies like Strive, Robinhood, Bit Digital, Galaxy Digital, et cetera. How are you evaluating these various debt securities? Like, what exactly are you looking for?
Yeah, well, you wouldn't know this, but we've been also adding to some of the strategy securities. And we're going to be at the top end, limited to about 5 to 7% exposure in any one issuance, just pursuant to process, right? I don't know when we're going to be out of this bear market. So I always want to be managing the risk. In the case of Strive, which is our top holding, to your point, and to your point further, in the case of Strive, we're owning the preferreds. We consider the preferreds as income. DADS needs to be providing income. I look at preferreds as debt. Other people might look at them as equity. But in our case, it's a debt because ultimately you have to pay income on a preferred. So that's why I look at it that way. And we're not investing in the convertibles preferreds in strategy just yet. We own some of the convertible strategy converts, but in a small way. But in the case of STRD, which is at the smaller end of the spectrum of our portfolio, around 1.5%, you're getting a 16% dividend payment off that security. Is that going to protect you if we go to 20,000 in Bitcoin? No. And my bet is in this case, we're getting paid to get that kind of exposure. We're managing that risk. In the case of Bit Digital, it's a whole different kind of situation where they've got, again, an asset base of Ethereum as well as ownership in an equity of a publicly traded company that gives me some cushion, right? And we're getting a coupon on that. The strategy overall is designed to give you exposure to the space again, and manage that exposure so that you get dividend and capital appreciation. So far, by the way, we've done pretty well.
In addition to the debt securities of, say, digital asset mining companies and DATs, the Strives and Strategies of the world that we just talked about, I know payment platforms, those sorts of companies, the Robinhoods, where you can transfer crypto. My understanding is you can also hold the debt of, say, utilities and energy companies providing electrical power, say, to Bitcoin miners, or the semiconductors and hardware providers to miners. Is that correct?
Nate, you've done your homework. Thank you. 100% correct. So we also own some of the data centers. I was on the restructuring committee of Core Scientific, so I know the space well, right? And in the case of the data centers, these are convertible ETFs. And if you look at the fixed income space overall, you're going to find that the convertibles have done very well in the ETF market, in the way of fixed income. So we're in the right space in that. And then we mix it also with corporate bonds to manage some of the risk. Listen, we're invested in Figure Technologies, which just launched a new issue of about 600 million 144A bonds, and it's an 8.5% coupon. This company we'll do about $1 billion of revenue next year in 27 with about a 50%, maybe 60% EBITDA margin. That's a healthy margin. The stock and the company that, the stock I follow today for many, many years, I know management. That's one of the things that we bring to the strategy. I've been involved in the stocks for like 9 years, right? So I know the companies.
Okay, so to that point, I agree. You do have a front row seat here. So I have to ask you, with a crypto downturn we've experienced since about early October of last year, what type of stress or deterioration have you seen that create across some of these debt securities? Or, what have you heard in conversations with management? Is there anything that has stood out to you?
Yeah, well, first put it into context. DADS was launched in August of last year. So we're coming on our 1 year anniversary, which is great. We've managed to, I can't say avoid, but be very targeted in how we approach the stress that you're speaking about. In the case of the DATS market overall, I foresee a lot of DATS, frankly, going away. They're trading at massive discounts, the equity. And a couple of them have tried to launch debt to the market, but they're too small. And a lot of them don't have business models. So that's another challenge, right? I think a lot of the DATs that go away are just going to end up being kind of like convertible equities that are currently trading at like 30 to 50% discount to their NAV. And then they're going to convert into owning a company. Whether that's in the space, I don't know. But there isn't a lot of debt of those companies that you can buy. In the way of the IBMs of the world, they're fine, right? Strategy as an individual company and Strive as an individual company, we've managed to size that risk carefully. So we've been okay. We were also buyers of similar bonds when we launched, which again, I think we bought like 77 cents on the dollar and we sold to Matt at 100 cents on the dollar. So that was a big win for us. And then the data center stress is a whole different stress, right? Because these are convertibles. So there's some volatility in DADs from them. But listen, two things with DADs, I'd say. If you don't believe in Bitcoin and crypto, you're not a buyer of DADs. If you don't believe in AI, you're not a buyer of DADs. But if you believe in those two things, you should be looking at this fund.
In terms of the risks involved in this space, and clearly strategy, and then I would say Strive, they garner a lot of headlines around the debt securities that are out there. And I think you saw this because we had a brief interaction on X last week, but I visited with Strive CEO Matt Cole on last week's podcast. And I asked him about the logic of companies offering preferred securities or other debt securities that are backed by Bitcoin, because obviously Bitcoin produces zero cash flow and it can introduce significant price risk, exactly like we've seen over the past year or so. So I love to have you talk more about how you think about that risk when you're evaluating these securities.
So when I'm looking at strategy as an example, he's gotten a lot of pushback for saying he'd never sell Bitcoin and now doing it and doing it at a loss. And I think that that criticism comes from maxis, which is fine. To me, when I look at strategy, he's very pragmatic. He can absolutely do the math, and he's accountable to a board of directors with good governance. So I don't really worry about strategy, and I look at all of this as an opportunity. I think somebody said that in the second quarter he bought something like 77,000 Bitcoin, and he sold 3,000. That's a quarter. Wait, so How would you view that? Is he incrementally a buyer or incrementally a seller? Because he has to, just to manage the risk. I look at it as pragmatic. And in the way of the securities that he's issued, there could be an interesting exchange between some of the preferreds, so that he shrinks his preferred issuance on the basis of what he has to make payments in the way of cash flow, right? Like the D's, as an example, are junior, and maybe he retires those because the amount of the D's is smaller than what's available in the stretch, and there's more liquidity in the stretch. So his cost of capital would be reduced if he retired those or got them to be exchanged, as an example. In the case of Strive and Matt, he comes from a fixed income background, and as everybody knows, also comes from an ETF background too. So again, I'll manage the risk. Could the Strive preferreds go down again if we are in fact still in a winter in the fourth quarter? Yeah, they will. They will, absolutely. But our exposure to the actual crypto will be managed, right? It'll be someplace around 10%, maybe 15%. And thereafter, we're going to have the data centers. Thereafter, we're going to have the IBMs, the Visas, and the MasterCard for such protection. So if we can achieve, as we're doing right now, a 5 to 7% dividend yield on the ETF with the potential for capital appreciation, I think that solves a solution, or I think that's a solution that people would want.
So is that the ultimate goal with an ETF like DADS? Higher yields and perhaps what you may get from some other vehicles, right? That greater income. I guess you also have the potential upside with any convertible securities that are held as well. But if you were to boil this down, why an investor or advisor might want to look at an ETF like DADS, how would you summarize that?
Yeah, so I think if we can get if we can deliver a total return that's in the teens, that's a solution people are going to want, right? And I think that under the premise that we have inflation, hard assets become in demand, this is a product that offers safe exposure. My compliance department's going to kill me for saying that, so forgive me on that. Safer exposure, because data centers are a hard asset. Bitcoin is a hard asset. And by the way, Ethereum, which we also give potential exposure to, is also a hard asset that has a yield embedded in it. So what we could see, hypothetically, is if we have a fourth quarter rally in crypto and a bond market that goes down, we might see DADS flat or up because we have those kinds of hard assets in the portfolio.
To the point you made earlier, you said, and I think this is obvious, but let's restate it, that if you're not a believer in crypto or you don't believe in, say, the AI story, this isn't going to be for you, right?
Yeah.
But if we were to maybe just take a step back here, you mentioned earlier the crypto winter that we're currently in. And when you look across Bitcoin, Ether, Solana, you're talking about drawdowns of 50, 60, 70%. And so even if somebody is a believer in crypto, when they see that type of drawdown, maybe it dissuades them a little bit. I'm just curious about your thoughts around that. And maybe if you have any hot takes on why we've had this drawdown since, going back to, like I said, early October or so of last year.
Yeah, I mean, I'm not a maxi. Let me be clear on that. And it's been disappointing how Bitcoin and the space have traded. We in my mind, we have inflation, and Bitcoin was supposed to protect against inflation. Now, having said that, if you believe in the 4-year cycle, and you believe that Bitcoin peaked at, we'll say 125, and here we are, roughly 50% drawdown, we should be within 3 to 4 months of a bottom, right? And what typically happens, and this is coming from a place maybe of experience, you don't always want to be trying to catch that knife in crypto, right? Because nobody knows the bottom. I could call for a bottom at 50. I could call for a bottom at 40, or 60 for that matter, right? But what ends up happening is when it turns like fire, as Michael Saylor would say. But it's a momentum asset class in a lot of respects. It's a technology class in the way of blockchain, but as an asset class, it's a momentum. So what I would envision is after we bottom, the expectations are that we'll bottom around the fourth quarter, and then we'll try and reach new highs again. Will that happen? I'm optimistic. My crystal ball is the same as yours, but and at the end of the day, in the way of dads, I'm a risk manager. I have to focus on that, and diversification gives me that kind of balance.
Are there any other potential catalysts that you're looking for to rekindle that momentum? I mean, you mentioned the 4-year cycle, which I think a lot of people in the space are familiar with, but let's maybe set that aside. Are
Sure.
there any other catalysts that you would like to see that could perhaps propel crypto forward?
Well, the interesting thing, particularly in the fixed income market, you have states embracing Bitcoin in different ways, as an example. I think it was New Hampshire that's issuing a bond with Bitcoin backed. So as each month that goes by, we're seeing greater adoption of the asset class and certainly the technology. That to me is proof of concept. You now this is about the technology. Remember, DTC, Swift, JP Morgan, BlackRock, like the big guys are really embracing this technology. And as an ETF guy, we know that with ETFs, and I would argue ETFs are a form of technology. It's a wrapper, right? It's delivering a service that's faster, lower cost, transparent. That's blockchain. That's blockchain in its form. So I think there's also the possibility of Clarity getting approved. Right now, it's a 50-50, possibility. If it doesn't, we now have regulation from the SEC and the CFTC powering forward as well. And when I look at the future, I think we'll figure it out. It may not be exactly as we want it, but having gone through my ETF experience, and you remember years ago, and it felt like a revolution, the whole concept of an ETF, right? A lot of times people talk about crypto in that same vein, but it's an evolution. Let's be honest about it, right? And my bottom line on it is if you're delivering a better solution, everybody's going to want it.
All right. So you've mentioned blockchain, you've mentioned technology several times. Let's talk about the other ETF that you're a portfolio manager on, which is the Amplify Blockchain Technology ETF, again, ticker BLOK. Do you want to just provide a quick snapshot on this?
Well, sure. Thanks for giving me that opportunity as well, by the way. So BLOK was launched in 2018. It's managed by Mike Venuto and myself, with Corey Reed as well. And the focus is about capitalizing on the picks and axes, the underlying technology, and investing in companies as the case figure, Coinbase, Robinhood, the data centers. It's very much all about delivering the technology in an equity form. Okay. We've compounded at 18% since inception. It's a volatile fund. It is a volatile fund because of the technology adoption that we're seeing in the future. And at the end of the day, the beautiful thing about BLOK is it's like 6 to 7% overlap to the Qs in the S&P. So we're delivering tremendous active share. And I couldn't be more excited about BLOK as well.
Do you view BLOK as sort of a leveraged play on crypto, or is that not the best characterization?
I wouldn't use the word leverage. We're about 10% exposed to the Bitcoin ETFs and the Ethereum ETFs. We've got 4 DATs with SharpLink also in the portfolio. And I'm sorry, I think of in terms of tickers, Hyperliquid, Pure is that ticker, and Metaplanet as well, and of course Strategy. And those are small positions. And what we can do, because we're actively managers, we can pivot harder towards crypto if we believe we're out of the winter, right? And take down some of our non-core positions that are like our safety plays, like the Visas and the MasterCards. But let me be clear on something. If you look through the Visa annual report, you'll see them mention blockchain like 15 to 20 times. And if you do research on MasterCard, they've got roughly 30 to 40% of all their transaction volume tracked on blockchain, right? This technology is ubiquitous across a lot of the larger companies that people don't recognize. And IBM, as an example further, like they build blockchains for folks, including like Walmart. So, I mean, it's been a wonderful experience watching companies adopt the technology. And even the skeptics like Jamie Dimon at JP Morgan, which we don't own, and probably won't own because everybody owns JP Morgan. I'm not adding a lot of value if I buy JP Morgan, right? He's a big user of blockchain, big user, according to him.
Real quick, just to be clear on my comment on leverage, there's no leverage within this ETF. Really, what I'm suggesting, and I know you've heard this, everybody's heard this, but I always think back to gold and gold miners,
Sure.
where a lot of people will say gold miners are a leverage play on gold. So, theoretically, if gold's up, say 10%, the miners are going to be up more than that, just with the inherent operating leverage embedded in the business. But it sounds like maybe you don't necessarily view things that way on the crypto side. We're talking about picks and shovels plays on crypto.
Absolutely, picks and shovels. Listen, if Bitcoin was up 50%, which it might be at some point, right? I wouldn't expect us necessarily to be up 50% because our exposure is coming from a lower level, right? But again, that's one blockchain.
All right. Before I let you go, and I think I know how you're going to answer this based on your earlier comments regarding the SEC and DTCC and JP Morgan and everybody else, but you are somebody who is a longtime ETF industry veteran. And so I have to ask you about tokenization. And the way I'll ask you this is you can choose your own adventure here. Are we heading towards a world where every ETF will be tokenized, or will it be a hybrid world where maybe tokens are, it's a share class, right, of existing ETFs? Or is that just the middle ground until we get to full tokenization? What are you expecting here?
Yeah, I've got to give Mike Venuto some credit here because back in 2018, this was part of the vision of BLOK, right?
I remember that.
Yeah, and here we are today in 2026. And your question is also what would be the asset base of ETFs and what percentage I think might be tokenized. Like if we look out into 2030, right, where we've got $30 trillion of ETFs that are out there, and a good portion of them might be in the way of fixed income, of course, right? I think some ETFs will be tokenized between now and then. But tokenization doesn't define liquidity, and that's the biggest challenge. By the way, this week, I don't know if you noticed, Vanguard's now advertising for a digital asset strategist. I mean, how far have we come, really, in this space? Will Vanguard eventually tokenize their ETFs? I don't really think that's in the near term for Vanguard to do. But BlackRock is definitely going to lead in the way of ETF tokenization. And I think Larry Fink has said that, right? So I think it's going to be an evolution. I would guess that in the next year, we're going to see ETFs tokenized. Stocks are already tokenized. By the way, to your point further, in the way of SpaceX, which we are also long in DADS, a platform that is aligned with crypto, Hyperliquid, right, helped define, I would argue, how SpaceX opened. Like, if you were looking at the Hyperliquid platform, you could see before SpaceX opened where it might open. I mean, like, how crazy is that? So I would say the answer to your question is, look into 2027, 28, we're going to have a lot of ETFs experimenting on it. But the question is, will it be liquid, and will it be traded, and will the spreads be tight? And I'm a little bit hesitant to say that the spreads will be tight at 3 a.m. I don't think that a lot of financial advisors are looking to trade at 3 a.m. But my last comment on this is, why do we need it is part of the question, right? And that's up there also with, why did Vanguard decide to look for a strategist in the space? And maybe it's capitulation. Maybe it's just that this younger audience, this younger generation, wants things to be tokenized, right? They want that optionality of putting their stocks, their ETFs, their assets, real world assets, in their wallets. Maybe wrong, maybe right, but that's what the younger generation wants, right? Younger generation also wants, I'm going to say, HELOCs that only take 5 minutes or 5 days from Figure Technology, not 45 days from JP Morgan.
I agree with all of that. I think that's really well said. And, whether you or I believe in trading 24/7 or having instantaneous settlement or being able to do anything at our fingertips, pull our phone out of the pocket, the expectation is, if we have that technology available, then why not use it? And there's a cohort of investors who want instantaneous settlement and 24/7 access, et cetera, et cetera. And so, in my opinion, where we're heading is, we have these two paths. You have the TradFi path and the DeFi path. And I think we're heading down a path where those two are going to merge over time, and they'll become one and the same. And you, as the end investor, you probably won't even be able to tell the difference, because you're going to have a slick user interface. You're not necessarily going to know what's going on behind the scenes. But in the back end, when you talk about all the intermediaries involved, the DTCC and everybody, I mean, from market makers, everybody involved in the ecosystem, you're going to see a lot of cost squeezed out of the back end. And so it's going to be, that's going to be beneficial to investors. And then again, just with these other benefits, I just think that's where we're heading.
Well said. I couldn't agree with you more on that. And we didn't even talk about stablecoin, like, to your point. Like, I can't believe we spent 30 minutes and didn't talk about stablecoin. But we'll do that another time.
I agree. We can, we'll tee that up for the next conversation. Dan, always great to connect. Really appreciate your insight here. Thank you for joining me.
It was a lot of fun. Thanks, Nate.
That was Dan Weiskopf, Senior Portfolio Manager at Tidal Financial Group. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next time.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.